Hi YouTube, please give me a moment while I go live on Facebook. We'll be getting started in just a second. And we should be live on Facebook. Hi everybody, welcome to another weekly video of the Strategic Swing Trader. I am Sami Abu Saad, Director of Education at T3 Live. Hope you're doing well, hope you're enjoying the weekend. We're gonna go ahead and get started by looking at the market and looking at some swing ideas for next week. But before we do that, as always, a standard required disclaimer to let you know that trading is risky and that whatever we discuss today is for educational purposes only. Also, if you'd like to download a copy of my free ebook, link for that is in the description below. I also dropped a link for the list of stocks that I'm going to be going over. Not a link, but I copied and pasted the list of stocks that we're going to be going over right now in the description of the video below. So feel free to copy it, paste it into your watch list, and let's go over it together. First, if you find benefit in today's video and you would like to help support the T3 Live channel, please be sure to hit the like button, whether you're on Facebook or YouTube. Please be sure to hit the like button. And if you have any questions at all, would like to get in touch with me or any of the people at T3 Live, info@t3live.com. Okay, info@t3live.com. But without further ado, let's get started. Let's take a look at the market and let's take a look at the individual stocks that I like for next week. First, we'll start off by going over the SPY daily chart. The daily time frame is the main time frame for swing trading. Okay, we saw the SPY break down a little bit and then on Friday had like a 2.5% pop or something like this and reclaimed the 20 almost. The point is the SPY looked bearish and reversed most of that move down already. The QOS is in a downtrend, you can say, pretty much in a downtrend. I'm taking out my annotation tool. Okay, lower highs, those are lower highs, lower lows. Okay, lower than the prior, we have 3 lower highs, 3 lower lows. The IWM, which is the Russell 2000, is closer to the way the QOS looks than it does to the SPY. Okay, so it's got a big rounding top above, which is bearish, by the way. This is like Bitcoin right now. Bitcoin, I talked about it in last week's video. I wasn't planning on talking about it today. I don't even have the Bitcoin charts up, but it's triggering a monthly climactic sell setup. Last week's idea on Bitcoin never ever triggered, so it was cancelled. But actually has a monthly sell setup right now on Bitcoin. At any rate, so back to the equities market, the SPY is very bullish. The QOS and the IWM are shaky. Our job as technicians, as traders, is not to try and predict charts every single time, no matter what the pattern looks like. Our purpose, our goal is to predict the future when there is a predictable pattern, when there is a high probability pattern. Right now, it's not there. If I had to predict what the market is going to do, I would say sideways for the foreseeable future. The SPY lower limit would be the most I would expect would be 370 something, 375, let's just say. That's the most I would expect. Upper limit doesn't have an upper limit. Obviously, if we, just a couple more days of up days and we'll be at all-time highs. So it's going to be probably, the picture is going to be a lot clearer by the end of next week. We'll see which index leads. Is it going to be the tech stocks pulling the market down with it and the SPY with it, or is it going to be the SPY led by the financials, of course, right? Kind of leading the way. Okay, so we'll find out next week. But if we were to drop, I gave you what the lower limit is for the SPY. The QOS also, I don't think we're going to drop below, even if we were to drop, and I'm not saying we will. It's not an easy call just yet. But I don't think we would drop below 300. I got a message, email, somebody saying, is this the big top that everybody's talking about? I don't think so. While the monthly chart of the SPY, the QOS, the IWM are all extended, last time we had a topping pattern was at the beginning of the year, in January. We had a nice big top and tail, as you can see. Let me zoom in a little bit so you can see better. Okay, we had a nice big top and tail right here, broke under it. We had a pretty big red bar, and before the monthly bar, before the month was over, we ended up with a big bottoming tail bar and made, went up to all-time highs, made new all-time highs. So my point is, if we are really gonna drop, we should have already done it a couple months ago. We would not have failed on this monthly climactic sell setup right here. So I don't think, even if we were to drop, I don't think that the QS is gonna take out again. This is 300. It would be my, if we were to turn bearish, is what I would expect. Of course, as traders, the most important skill to develop is to be flexible and adaptable. We don't have to, even if we're wrong, or we have to adjust and adapt as we go. That's the most important thing. And it's, by the way, remember that quote by Charles Darwin, it's not the strongest of species or the most intelligent that survives. It's the most adaptable. So it's the same in trading, truly, because the market environment changes all the time. You get bullish markets, bearish markets, sideways markets, but not only that, what works often changes. Sometimes it's, trend following plays, sometimes counter trend trades, sometimes, you see what I mean? So the most important thing is for us as traders to be adaptable and flexible. And it's not an easy thing, because if you think about it in our day-to-day life, do you like constant change? I mean, I don't like it. I don't think anybody does. So it's hard. It's hard, but I discovered this the hard way, because I remember in 2000, I don't remember what year, 2011 or something, I was on fire and the market changed towards the end of the year, but I was still relatively new to trading. I started trading in 2007 full time. So in 2011, when the market changed at the end of the year, I couldn't adapt to it. I think I gave back $44,000 or something like this before I realized it's not just me. It's not that I'm slumping. It's the market changing, and I didn't realize that until, a few months later. At any rate, let's go back and take a look at some swing ideas for next week. All of the swing ideas, with the exception of one that I picked for myself and for the newsletter, are long-term ideas. Why am I going with long-term ideas only? Because this is not a good market environment for swing trading. When you have a huge down day and then a huge, a big gap down, and then you get triggered into the shorts, only to see the market go up, only to be reversed the next day, only to go back up a couple days later. So, you get triggered long and then you get stopped out. You get triggered short, then you get stopped out. So this is not a good market environment for swing trading. So, and for that reason, I have some long-term ideas on here, and I picked 5 of them. 4 actually are long-term ideas that should not, with wide stops, that should not be, that should not get stopped out based on the gyrations, the knee-jerk reactions right now that we're seeing in the market. So that's what I'm going with, just so you know. I'm not going with the 1 to 3 or 1 to 5 day swings. I'm going with more the long-term investments right now, because I think the market is not going to collapse. That's number 1. Number 2, one of them is a short, by the way, long-term short. And number 3, I'm using wide stops so that I don't get stopped out easily. Okay? Let's take a look. We got ACAD. Now, one last thought. Sorry, I talked a lot about the market, but one last thing. What if the market just pops and goes all the way back up to the highs? Then we wouldn't have to worry about the market dropping and being choppy. If, let's say, next week the market just turns into a really bullish market without the back and forth that we've been seeing, then we wouldn't have to worry about the swing trades or about all these knee-jerk reactions that we've been seeing. Okay, so here's the swing ideas that I like. First, ACAD. You see how it broke down right here, got rejected, lower prices were rejected. It's basing now, and this is the 20-period moving average. That's what I look for, is for the 20 to start curling up and pushing the stock up. So I like it over this bar's high as a long, okay? Stop under the red bar's low. And then target the gap fill around $25, I would say. Maybe you know, if the market turns really bullish, it gets to 30 bucks, to the next resistance area, right about there. Maybe. That's ACAD. It's a swing trade too. It's not a long-term trade. AGS would be a daily buy setup. It looks good on the weekly chart too. So we have there are primarily two ways to play stocks and any tradable instrument, because price is correct through what? Through time, and stocks correct through time and through price. Through time by going sideways, in which case you can look for base breakouts, or through price by pulling back. Those are the only two ways, mostly, that stocks correct in, and everything else is a variation. So you're going to see that all of the plays just about are either pullbacks, right, in an uptrend, and you get a pullback, or a base breakout. You get a base and then a base breakout. That's it, pretty much. Now there are different variations. It's not always going to be a base. Sometimes it's a 1, 2, 3 pattern. We talked about the 1, 2, 3 pattern in the last 2 videos. Sometimes it's going to be, you know, a W pattern, an M pattern, some kind of a, you know, different patterns. But by and large, it's going to be a subset of either a base breakout or a pullback. So this was a base breakout. That's a pullback. ASO is a breakout. So it would be over this bar's high, stop under the green bar's low. And this one at the all-time highs, the chart is messed up here. That bar shouldn't be there. It's at all-time highs. It looks higher. It looks higher over here. Stop right here. No target. When it's at all-time highs, there's no resistance to the left. It can just keep going. So there's no target on it. FTCI, that's a climactic sell setup. The climactic buy setup. This is actually the third way in which stocks correct. So through pullbacks, through base breakouts, through pullbacks, and the third and least common, these two make up, I would say, over 90%. These two patterns. The third way is when the stock goes climactic. Okay, it collapses, it flushes out all the weak hands, and when the last batch of sellers that want to sell is out, then that's usually when the market or the stock goes back up. So this is a climactic buy setup. I like it over 865 long. The stop, one could use this bar's low, which is 820, or safer would be, you know, 779, and then room to 11 bucks, to the red bar's high almost. Okay, so that's the FTCI, climactic buy setup. GALT is a pullback. Sometimes you get a pullback plus it goes up, and then bases plus a base breakout basically. So over the tails long, stop under right here and target right there. Okay, the prior resistance level. That's the GALT. HNST is a climactic buy setup also. It's exactly like the FTCI. The difference is the FTCI has not triggered yet. The HNST should have already, it triggered on Friday. I didn't see it, I didn't get it, but it looks higher also. Maybe all the way up to, take a look, to 20 bucks. About $20, not quite, okay? So that's the HNST. INGR, this is a stock that I tried a couple times, took stops on it twice, but I really, really like it as a long-term trade. INGR and EPC, which I guess I don't have on the list. Those two look very, very good long-term patterns. Very similar also, breaking a multi-year downtrend and starting to transition higher. So I like the EPC. It's not on the, I guess I accidentally left it off the list. I don't give you the entire list. I just give you the list of things that I think are most ready for Monday. But the truth is, I have 300 items in my spreadsheet that I scan and every day, and I just pick the ones that I think are most ready. So the EPC, I don't think is the most ready, but I like it over 45.50. Stop right here as a long-term play. INGR, similar, over Friday's high, 97.12. There's two places to place the stop. One is under 94.40, or all the way down under 90 bucks. So you give it a lot more room. Of course, the bigger the stop, the less shares you can have, basically, because the more risk. KALV looks really good on the weekly chart as a weekly buy setup. So this is a pullback. It's got a range expansion bottoming tail, REBT, range expansion bottoming tail. That's actually the strongest reversal bar you can have, is when you get an REBT, and it would be over 26.50 the entry. Stop under 23.70, okay? Target about 35 bucks. on the KALV, longer term play. The METC, let's take a look at the daily chart. It had a very nice gap on Thursday. Friday was an inside bar, so over $5, stop under 460 as a 1, 2, 3 play, and target, maybe target 1 about 530. That's not one of the ones that I picked, but this was a powerful gap on Thursday, and I think if the market continues the bullish move that we got on Friday, I think we'll see continuation if it can take out $5. A lot of times the plays that I mention here, they don't trigger. Meaning, let's say we talked about the KLV here. We said over 2650. What if it doesn't take out 2650? Then it's no good. You have to wait for it to trigger. To trigger means to take out an area that I deem to be important. A line in the sand. Once it crosses it, once it takes out that resistance area, then I'd get in it. And so what I usually do is I set alerts, or if the play I think is ready, then I just put my order in the system. And if during the night before, and if it triggers during the day, then I don't have to do anything about it. It just, I'm in. So the KLV we talked about, METC we talked about, PRQR is a base breakout. It looks honestly better on the weekly and maybe even the monthly chart. Transition A on the monthly chart is a breakout. So I like it as a longer term play over 706 by 560. 706 would be up here on the daily chart. That would be kind of too big of a stop. So I actually would just do it over 670. And the stop is under 566. 566 is fine. So it would be over 670 by 566. About $1, slightly more. That's the PRQR. TRVG is another weekly buy setup similar to the KALV. So it's got lots of bottoming tails, like it a lot. If it can take out 385. The stop is just under 320. So 55-cent stop. Target, the prior high, 525, 538. But I'm worried about that 200 MA right here. So that might be target 1, and then 530 or so, target 2. But I really like that weekly chart. If it can take out 385. VRS is like the METC, is a 1, 2, 3 after a gap up. So I like it higher over 1760 with a stop under 1687. And last but not least is the VYNE. I guess that's not very good, honestly, but it's got a nice hourly base breakout. That's what I like about it. So over here long, stop right here, and then target would be about $4 or so. It's not something that I'm looking to do, but I'm just going to watch it. Okay, the list of shorts that I like. ADVM. ADVM, I played it long last week, this day, okay? And not the next day, but I think the day after I killed it. I took a small loss on it. My stop was under the low, so I raised it right away because it wasn't looking good. And notice that it tried to go higher here, and it turned into a topping tail bar. So now I like it lower, even though I liked it higher last week, but it failed, or it didn't follow through, so I killed it. Now I like it lower. You know what this reminds me of? The absolute best play that I had last week, but it was from the week before, and it was the HAE. I played it long on this day, okay? It popped, triggered me in, no follow through, killed it, and I flipped it short. So check it out. Flipped it short, and then I don't know which day I got in short. Then I sent out another alert to add to it under the SPARS low. So there were two plays on it. 3 plays. First long, didn't work, lost on it. I noticed that, now it's basing for a base breakdown. Short right here under the base. I got triggered in that doji bar. And then the next day I saw a nice healthy red bar, short under it one more time. So there were 2 plays on it, and then we got to target 1, which was $60. So this day was target 1, okay? And then yesterday, or Friday rather, target 2 was 50, and we got lucky that it had some news, and it gapped down to 50. It got to 49.25. So this was a phenomenal trade because, and especially because a lot of the swings didn't work last week, to tell you the truth, but this one paid off for all the other small losses and more. So this is similar. ADVM looks a little similar to me. Now the only difference is the HAE had plenty of room. So we got involved, I don't know what price, so 70. So it was right here, okay? Had plenty of room. I picked 50 because that's where I estimated that's where the 200 was going to be. And it got to 49.25. ADVM, Unfortunately, the all-time low is at 250, not too far below. It's just $1. Will it take it out? I think so. I think it will eventually take it out. But we do have support below, unlike the HAE, which did not have support all the way down to 45, maybe 45 bucks, and I got involved at 70. So that's the only problem. Otherwise, it honestly looks just as good as the HAE. AEI had a secondary offering, so as a short, it would be under 354 or so. Stop over 422. Okay. From the list of shorts, I'm only going with one, just so you know. AYX, this looks good. Under the base, stop above it. Okay, one can also put the stop just over that green bar's high. But because of the volatility in the market right now, it's not a good idea to go with tight stops. It's better to go with wide stops. And if you look at the monthly chart, so I use the daily, the weekly, and the monthly, that looks pretty good lower. Still bearish, all the way down to maybe 40 bucks. Now, it's at 77. For it to drop to 40 bucks, it would need to lose 50%. So maybe that would be a little unreasonable for us to expect down to 50. What about 60? Is that more doable? I think so, and that's still 17 bucks. That's not bad at all. So I like the AYX as kind of a longer term short trade. Okay, EVOK is similar to the AEI, but better than the AEI. Is a 1, 2, 3 after a gap down. So short under $1.12, stop over $1.25. People say, well, it's $1.12. How low could it go? It can go to 0. And if it dropped to $1, if it dropped to, let's say, 65 cents, how much would you have made? How much would you be up? 50%. If a $100 stock dropped to $50, you'd only also make 50%. Does that make sense? So it's not about the price of the stock in absolute value. It's more about the reward to risk, honestly. And it's not about even the percentage drop. Sometimes, like this one, was my best trade a couple weeks ago. And if you look at it, and you might say, how much did it move? It moved, I don't know what my entry was. I did 2 plays on it, just like the HAE. I did 2 plays on it, 2 entries. But let's just say average 38. It went to 40. That's not a lot. That's only $2. And yet, I'm telling you, it was my best trade, even though it wasn't dollar-wise or percentage-wise, wasn't a lot, because the stop was very tight. So in terms of, reward to risk, it was pretty high. Reward to risk, okay? So at any rate, continuing on. So EVOK, I like a lot more, I like quite a bit. GOOS is a 1, 2, 3. It needs to break under 37.40. Stop over 39.34. So if it breaks under 37.40, entry, stop over 39.34. The only issue with it is how low can it go? And I think that's the first support area, about 35 bucks. The 200 MA plus, you look to the left right here, there's more support. So that's the only issue with it. Doesn't really have a lot of reward to risk. GTT is bearish, just basing at the all-time lows. I like it lower under $1.37. Okay, $1.37. Stop over $1.60. NTEC is bearish. Look at the base breakdown that's happening. That might happen if we break under the lows there. So short right here, stop right here, and then maybe target right there. So it has enough reward to risk. ODT is a base breakdown too. This is very similar to the GTT. So ODT would be under $3 or so. Stop over, no, I think it broke $3. Yeah, it's under 280. Stop would be over 312. Okay, 312 on the ODT, all-time lows. So, there's no way for me to predict what the target is when it's at all-time low, because I look to the left for support. There's no support. So it looks lower, and who knows how much it can drop, or how much it will drop. And then last but not least is the YCBD, and it has the breakdown, the doji bar, and then if we break under the lows of both Friday and Thursday, then you will have a 1, 2, 3 pattern. And again, we talked about the 1, 2, 3 pattern in the last couple of videos. If you want to go back, or just it's part of my YouTube playlist, there's a couple of videos that I've done in the past about the 1, 2, 3 pattern. If you'd like to look it up, link for my YouTube playlist is in the description. Okay, so we talked about a lot of items. I hope you enjoyed today's video, and if you're a subscriber, you'd like to log on to your T3 Live account, I've already completed the newsletter for tomorrow. Or if you'd like to wait until you get it in your inbox, then it will be in your inbox before 8 o'clock tomorrow morning, giving you over an hour and a half to put the orders in and just take a look at what I have, what I'm going with. All right? Thanks so much for sticking around till the end. Again, hope you find benefit in these videos that I do. And if you have any questions for any of us at T3 Live, info@t3live.com. Thank you so much. Enjoy the rest of your weekend, and I will talk to you soon. Ciao, everybody.